time now for us to take a look at the local market space, and for that I'm joined by Brian Pyle, Portfolio Manager at Old Mutual Equities from Cape Town. Good to have you with us today, Brian. It does seem as though all the excitement has kind of fizzled out, but I take it this was expected given the fact that we saw significant rallies over the last trading sessions here on our local bourse.
Yeah, we've given away a little bit today, and coming up to the studio we were down just over 1%, but it's been a very good run, particularly in the industrials, and with a bit of rand strength and a little bit of giveaway, it's kind of to be expected at these sort of levels that we give away a little bit.
Let's talk industrials. Naspers is obviously the key one that everybody's been keeping their eyes out on. It's closed down lower than 5% today. The likes of Steinhoff also following suit. But let's pick up on Naspers because there's an interesting relationship there that it has with Tencent, where we've recently seen some activity from the chairman of that company reducing his stake in the company.
Yeah. So we probably have to go back to the 27th of March to really understand why Tencent was down overnight. On the 27th of March, the Chinese regulators changed the laws for investing in Hong Kong, whereby it allowed private clients and mutual funds to up their stakes in Hong Kong companies. And this has seen quite a strong rally in the market. The market's up about 14% since the 27th of March. And Tencent itself, before last night's fall, was up over 20%. So together with the market having gone up for 9 days in a row and a sale by the chairman of the company, we think that's just, taking a bit of a breather. But if we just talk about the sale for a minute, I mean, it's quite incredible numbers. The chairman has sold 0.2% of the company. So he's taken his stake from 9.8% to 9.6%. And in the process, he's pocketed proceeds of $415 million US, which, today's exchange rate, that's close to 5 billion rand. So significantly big numbers, but it's never a good sign to see the founder, the CEO, the chairman selling anything. So it's probably in sympathy with that as well.
Brian, to get your perspective on Naspers, one market commentator mentioned to me yesterday that it really is a company of companies. When you look at the investment case, do you think that there is a significant over-reliance on Tencent and the growth potential that it sees out of that particular company?
It certainly is dominated by Tencent, and if you take the Tencent spot price overnight and through into the Naspers price today, you're getting the rest of the business for free, and we think that the rest of the business has got significant value, led by pay TV or DSTV as we know it here. But the e-commerce businesses with Flipkart and OLX, it does have significant value. So one does tend to focus most of your efforts and time on Tencent, but there's a lot more to Tencent than to Naspers than just Tencent. So we think at these levels, may take a breather along the way, but there is still significant value because the investment case is just getting stronger and stronger. And with that, we're getting stronger and stronger cash flows as well. So I think people will, there will be volatility at these levels just because it has run so far and because of a little bit of uncertainty. But we think on the long term, there's still significant value there.
So you're saying it's a buy at just over 1,800 Rand?
I think you said, is it worth more than 1,800 Rand? We think it's worth well into the 2,000s. So somewhere around 2,400, 2,500 can easily be justified. It might take time to get there, and it might be a rocky road in getting there, but we think the value does exist.
Value does exist, so clearly then it is a buy. Brian, if we take our look now at Steinhoff, another particular stock which has been rallying very strongly, the investment case for this one, is it one that you potentially believe in, especially given the fact that the Frankfurt listing is set to take place in the next few months, if I'm not mistaken?
Yeah. Gugu, we are believers. It's one of those that has people that really don't believe in the story, and then those that do. And we've spent a lot of time, a lot of effort in the last number of years getting on top of the investment case for Steinhoff. In the near term, it is centered on the listing in Frankfurt. It's also centered on the deal with PEP, so they're buying out PEP. And those two events we think are creating renewed interest, if I could put it that way. There have been 4 broker reports in the market in the last 6 weeks, all of them with a fair value above 80 Rand a share. So while we don't really spend a lot of time, really analysing who thinks it's worth what, it's just more people following the company and evidence. We think that a lot of foreigners are actually buying into the share at the moment in anticipation of the Frankfurt listing that's going to come along without necessarily raising more capital. So they're looking to position themselves now before the listing actually happens. But the investment case is sound. So, if you ignore the listing and the PEP deal and things, we think that, the investment case is sound. They've bought and built a hell of a retail capability in times that were tough. And I think they're bearing the fruits of that now.
We can't ignore the news that came out from Everest or Highveld Steel today with regard to going into voluntary business rescue. For a lot of investors, surely this must come as a shock, or were the initial warning signs to reveal that they might have been trouble?
Yeah, it's never good news, and we feel sorry for the people that are caught in the crossfire here. We're not invested in Everest Highveld Steel. It's one that's reasonably liquid. But I think the writing has been on the wall for a while. So their most recent said the results were not great. The numbers to June last year, they lost about 300 million Rand. And the message embedded in those results wasn't great. And we've seen the share price react to that. So I don't think it's going to catch too many people off guard. But it's really a story around volume's been low in the steel industry. The steel prices are low, the vanadium prices are low. And that's just a mixture that doesn't go well for that particular company, who are at the high end of the cost curve. But it does speak to how tough it has been in the South African building and construction space in the last 2-3 years. We're not seeing a lot of volumes coming through, and the guys are battling to cover costs. We've seen Murray and Robertson Avenge today at 52-week lows, and it really just is speaking to the same theme that building and construction in South Africa has been unfavorable for the last number of years. And it's a sad thing to see a company like this go into business rescue.
Brian, thank you so much for your perspective today on the South African market performance. Good hearing your insights. That was Brian Pyle, Portfolio Manager at Old Mutual Equities.